Hi, this is Mac with PriceActionTradingSystem.com, and today is Wednesday, May the 2nd, and I'm doing this a little bit early today. The market is not quite closed yet, but I'm going to go ahead and do our chart lesson. I've got some other things that I need to take care of today, so I want to get out of here a little bit early, and so let's go over what we've got to this point. Most of you should have been through trading by now anyway. If you're still in a trade now, you're probably on the wrong side, and you're probably sitting there hoping it's going to drop several points or go up several points before in the next 5 minutes before you get kicked out. But anyway, hopefully you're not in that predicament. I've been there before, so I know how it feels. But let's talk about, there's your bigger picture, as you can see right there. This was our overnight trend line from the price action from overnight, and that's where I usually get my first trend line. And but let's back out and where we can see this a little better and talk about each of the trades. And I'm going to start about, we were pretty much in this trading range by the time the regular market opened, and but we still had this trend line, so we had to be aware of the trend, and the trend always takes precedence. So we were looking for a possible breakout here and higher, and then prices to go lower, and we got that right here. And you'll notice I circled this in green because this is an iffy trade, and if you went short right here, you might have got stopped out before prices actually went exactly where you thought they were going to go. And what I wanted, the reason I circled this is I wanted to show you why this trade is iffy, and just so you would be aware of it. But let me get that circle out of the way. Let me just show you that real quick. You might have gone short here or here, but let me show you why it's not the best trade, and why once we got all this overlap, why you should have exited. Because really most of your closes and lows are right here now, and so that's really what your range was looking like. That's more what your range looks like by the time the market opens. So first of all, if you went short below this bar, even though it's a failed break, you're going short below a bullish bar, and that's never a good idea. It's always best to usually wait on a bar that is a trend bar in your direction, which would be this bar. This bar is bearish, so going short under that bar, not such a bad idea. But as you can see, by the time that bar finished, you're getting short way too far down here near all these last closes. So you don't have enough room to get out of there. Even if you went to right here, there's not enough room to really get out of there safely. And so that's not a good place to enter. The only way this was a safe place to enter was just to be selling right up in here, and then you've got enough room. But if you did, even if you did happen to get trapped right here, when you got these next couple of bars that started overlapping, the smart thing to do is to go ahead and get out with a tick, with one tick or break even, or maybe even a tick loss. Don't play around with it, because you see what happened. Prices went higher, and prices could have actually made a breakout. It looks like an attempted breakout pullback here, but here's the same thing. You didn't want to go long above this bearish bar, because see what happened when prices broke up there? It just trapped a bunch of longs, and then it turned and went straight down, and all they did was trap people short here first, reverse it, and then trap people long, and then reverse it again, and that's the way the market operates. So always wait on a trend bar in your direction, and then keep the other rules in mind as well. So again, this trade right here, if you did get trapped in this, get out. Don't wait around for something terrible to happen to you with a 2-point. Now this bar right here, once we had this trap up here at the top, and then this bar closed, going short right here was okay. But even by then, you've got one, two, three, four, five overlapping bars. The only reason this is an okay trade here now is because we tried to go higher twice and failed both times. And remember our rule: anytime the market attempts to do something twice and fails, it's probably going to succeed in going much further in the other direction. And so we failed out twice at the top here, so going short here now is okay. We got a trap, and it still took it a minute to work its way on down, but as long as you kept your stop above the signal bar, which was right here, then everything was good, and you could have ridden this down and even had some runners that were worth several points here. Now this is what a breakout pullback short looks like. We talked about it a little bit yesterday. You've got this known trading range right here, and as you can see, prices broke below that quite a bit, pulled back, tested that area. Look, I never could close above that area right there, and then reverse. So going short here or below here is fine, and there's enough room to scalp out down here by the time you get to the lows. So this is a good breakout pullback short right here, and that was a nice easy scalp as well. You didn't get anything any more than that because we just went into another trading range. And that's another thing I'll mention here, that we're always talking about measured moves and looking for both legs, and you'll see there's probably one leg here, a pullback, and then a second leg. We'll just see how close it is to being a measured leg. Got one leg, and then there's your leg. Didn't quite make it, but that's a good signal that we're probably going higher from there. But another thing to do is whatever the width of this little trading range is here, if prices get through, the next trading range is probably going to be the same width. And if you measure from here to here, it's going to be really close to the same prices from, let's just see how close it is. But that's a good idea of what to look for if prices, well, let's try that again. There's our arrow, and if you drag that down, what do you know? It's a perfect measured move for the most part. So keep that in mind, and that's something that you can look for when you get these ranges that and prices break down and go. Your target is usually going to be about the same distance, and that's what you had right there. But this is we had this double bottom, really kind of a triple bottom. Prices broke out, failed, and we got a nice reversal bar. This is rejection. Notice how prices rocketed out of there. That's rejection of prices down here. And of course you can't tell that by this one bar, but being that far away from the EMA and your little double top here, you figure prices are at least coming back to there to test that. So going long right there was fine. And if you caught that, you could have actually ridden this all the way up today, kind of very similar to yesterday. It's not as tight this is another spike. See that spike up, and then we went into this channel right here. And again, this is very similar to yesterday. It's just not as powerful as the one we had yesterday. You can see this channel is much bigger and much what I'd call a more normal type channel. And this spike is not nearly as strong either, but all the same, that's what this is a spiking channel again. And if you'd drawn your line off those first two swings, you would have easily found these others. And even if you didn't have that, this is just a double bottom across here, and you can see that right there. So this is pretty much a two-legged move back to the EMA after a big move up. So we're looking for at least a measured leg. And here's your first leg, and then here's your second leg, and you can see that's about where prices got to before they stalled again. And so this is really just a two-legged pull back to the EMA. A lot of overlapping bars right here. So if you didn't take this trade, that's okay, but it would have still been good for a scalp. But what you expect is going to happen is prices, when they broke lower and couldn't go any lower, is that we're going to come back up and test this side here. So going long right there with the expectation that you're going to at least get back to here is a pretty good observation, and you can see that's exactly what happened. And then I was looking for the same thing to happen again here. But we got a little more out of this one. We got a couple of points on any runners out of this one because this was a nice, strong move up. When we were looking for another leg, we had the leg here, so we were looking for another leg up. And then what you've got right here is two legs back to this trend line. And so going long right there's another good trade, and boom, off it went. And the runners would have been good here too. So these were a couple of really good trades right here. And then you just got another chance to do it all over again right here. You could have gone long above this bar right here because it's really just a little doji. But it's always better to wait on your trim bar, so the better spot was here to play it safe. And you can see it took it a little bit to work out, but as long as your stop was down here below the signal bar, you were okay. And since this bar is really big, what you might have done is just dropped a limit order in here when prices broke higher, and you see prices would have pulled back and stopped you into this trade, and then off it goes. And then you can by being with your stop being down here, it's much smaller than a 2-point stop. So that's another thing that people don't understand that you can do is, and sometimes you're going to miss a trade, but just like right here, prices broke higher and then they ticked back a few ticks, and so you could have put your stop, you didn't have to put your stop above it. As soon as it ticked higher, you could have dropped a limit order in here or even in here and got filled. Putting it way down here would have been questionable because prices were closing back above the EMA, and you could see they couldn't hardly get through there. But at least drop your, instead of putting a stop here, just use a limit order and let it come back and get you, or even maybe risk one more or maybe 2 ticks. If you'd risked 2, you probably wouldn't have got filled, but you would have gotten filled 1 tick inside of this bar right here, and then you got plenty of room. But it still was kind of questionable even up here getting long, because look how close that double top is, and there's a good chance prices could turn there. So really this was the better place to get long. A doji right at strong support or at strong resistance is usually a good entry, and so we had that here, and so that was okay. And but anyway, that was pretty much it for the day, as you can see. And all this trend line is up here was a copy of this line right here. I copied it and moved it up. And another way that I kind of found this right here was I drew this line first off of these 2 swings right here. You see that? See how that still fits right there? I drew this line across there, and then I drug it down to right here, and that gave me another idea that prices might bounce right here, or not right here when they came back down here. So it just reinforced this line. When you draw that across there like that, and drag it down and it fits, that just reinforces that you probably got this right. So when we got this next bounce right here, there was no doubt this was a good place to go long, and then it was the same thing right here. So always draw your lines around, and you probably, I actually tried it off here first, and that was looking pretty good, and you can see it did come into play on both sides of the line. So it did have some merit as well, but when we didn't reach it right here, it made me kind of wonder, and so I did try it up here too, and it fit, and that matched what we had down here perfectly. So that led me to believe that this was the channel, and I felt pretty confident about it. So always play around with your lines and see what you can come up with, and because what you're looking at might seem pretty obvious, but then all of a sudden you draw it another way, and then it's really kind of crystal clear. So, but there were about 6 or 7 really good trades today, and hopefully you caught a couple of them. It only takes a couple of these trades. That's what I tell people. People will email me that and say, hey, can I make 6 or 7 points with your with this strategy? I usually only see 4 or 5 entries, and I'm like, well, you don't even need 4 or 5 entries. There generally are 7 to 10 good entries using this strategy every day, but you don't need that many. You don't want to take more trades. Really what you want to do is take the high probability trades, and instead of taking more trades, just wait on those high probability trades, and when you're ready to make more money, you just trade more contracts. And I mean, literally, I don't take but 3 or 4 trades every day. Out of the 7 to 10 that I see, I only need 3 or 4 of them. And if I get one wrong, I may need an extra one to make up for where I got tricked or got one wrong. But you don't need a dozen entries every day, because every time you enter, there's a chance you're going to be wrong. So by waiting and being patient on the best entries, you improve your odds considerably. And some people just don't understand that. They just want to be in the market. They're eager to trade, and if you feel eager to trade, that's a psychological warning that you're trading for the wrong reasons. You're trading because of the thrill of being in the market, and not because you're trading to make money. If you're trading for any other reason to make money, this is not the business for you, and you better get out of it fast, because you will lose your money. And I don't say that lightly. So there's only one reason you want to be trading the futures market or any stocks or bonds or anything, and that's to make money. And if you're trading for any other reason, whether it be physical or emotional, you're in the wrong business, and you're just asking for trouble. So But anyway, not to scare anybody off, but that's something that I like to make clear to people, that people ought to understand, is that I just believe some people trade for the wrong reasons, and they're generally struggling to make it, and they wonder why they're losing money. But that's a good reason why, because they're trading for the wrong reasons. But anyway, I'm going to wrap it up. I'm just rambling again. But I like to add that stuff in there because a lot of people want to pick my brain, and it's hard. You can't pick my brain. So, as people ask me questions or things come to mind that people are asking me, that when they are picking my brain, I like to use a few minutes during the video just to talk about it so that you can get a feel for what I'm thinking and how I'm evaluating the chart and what my thoughts are on certain things. So, and but anyway, I'm going to wrap it up. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.